5 points I want you to remember about this strategy. Number 1, it's long-term. Number 2, it's diversified. Number 3, it is boring in a good way. I'll explain that. Number 4, it's slow growth. And number 5, it is biblically responsible. Number 1, it is long-term. 8 to 10 to 12 to 15 years is our time horizon. That's our goal for you to use our strategy in the market. So if you get in, you're thinking, I'm not going to get out next year. I'm not going to get out next week, certainly. I'm not going to get out in 3 years. I'm going to stick with this for at least 8 years. In an ideal world, it would be much more. 8 to 15 years, I would say. And try to aim upwards in that area, 12 to 15 years. The people that do it long-term are the ones that do it really well. Think of it as you would this way. If any of you in high school had a crush in high school and maybe you dated them over the summer, a summer romance in high school versus a lifetime in marriage. I want you to think of the FISM strategy much more as you would your marriage, that this is for life. Now, you may not last in the market for life, but you have that same mindset of, I'm not getting out when things get hard. I'm going to stick with it for years, at least a decade. That's what we're thinking here, long term. Number 2, it's diversified. You don't have all your holdings in one sector or one stock. We talk about this all the time. You've got your money evenly distributed throughout the sectors. There's diversification in the type of investments as well. You might not have all your money in equities. You might have some in ETFs and mutual funds. And you may have some in other types of commodities as well, real estate, different things like that. You're not beholden to one company or to one sector. You've got a broad diversification to carry you through the market downturns because when one sector goes down, good chances another sector's going up and that can carry you and vice versa. Long-term, diversified. Number 3, boring. What the heck does this mean? Boring in a good way. I'm not running our strategy under the bus here. This is a good thing. It's boring in the sense of there's minimal risk. There's always risk when you invest, but we try to make the risk as minimal as possible for when you're investing. We're not in the business of taking foolish risks. Your money is simply too valuable for that. It's too valuable. Too valuable. Our strategy is built so anybody can do it. You pick your asset allocation model that works for you. You pick the stocks that you can afford from our buy list, not the broad list, from our buy list. You plug those in, you match it up with your brokerage account, then you let it go. Those allocation models, you can pick which one works for you. We offer really 2 main ones. There's the main investment model and there's the Timothy model. We have a third model as well, but I'm not going to talk about that one as much. Main investment model and the Timothy model. The main investment model is for you if you don't need as much hand-holding, if you just want to go for it and say, you know what, I'm going to try my hand at this and see what works. The Timothy model is a little bit more useful for you if you need some more hand-holding. And so it offers a variety of Timothy ETFs and mutual funds from Timothy Plan, the pioneers of biblically responsible investing. It's a do-it-yourself strategy. We tell this all the time. You don't need a financial advisor to do this well. You can be your own financial advisor. Number 4, it's slow growth. We believe a man grows his wealth little by little, and we believe that wealth gained hastily in a wicked way will decrease. On the other hand, wealth that is gained slowly will increase. Don't get discouraged if you don't see any real growth in the first couple months. It's going to take a while. It's going to take time. Stick with it, and you'll see that growth coming. It's like watching your children grow. You know, if I looked at Josiah today and I looked at him yesterday and I thought, he's not growing. He hasn't grown from yesterday to today. It's because it's a short time. Growth takes time. If I look at him from today versus when he was born, I can see, wow, tons of growth there. So really good stuff there. Slow growth. Last one, most important, is that our strategy is biblically responsible. The most important part of our strategy is that it's a values-based approach where we want you to keep your money out of the hands of companies that will dishonor God with it. So we're going to screen out abortion, pornography, gambling, human rights abuses, the LGBTQ agenda, anti-family entertainment, and any other warning signs that we might see. We're going to screen those things out. We're going to do our best to do that faithfully.